Hello, Warriors. How's everyone doing? Austin, Hugo, and who was first? Richard. How are you, buddy?
Good morning. Good morning, Dale. Good early morning.
Good early morning. What time is it there where you're at?
Oh, it's already 1 p.m.
Oh gosh, it's lunchtime.
I'm already thinking about what's for dinner.
Yeah. So I want to just make sure everyone is signed up for the event this weekend. Everyone signed up? Can you see the charts here?
We do.
Came in? Okay. So I wanted to start here. You know, there's a lot of people targeting Dixie over par. You know, there's some Elliott counts at par 13. But this is not a bad looking little 3-drive here. You probably, aren't going to have confirmation until we're back under this low. But, the euro again tried to make new lows. So we've had 2 successive new highs here in the Dixie without euro making a new low.
Yeah. I think it probably has to do with the minor components then. Dollar yen staying very high, cable struggling to
hold 130.
Yeah. The morning in the euro dollar has been dominated really by this large option expiries today between 109 and 109.30. Okay. And the hedgers must have been really active because we struggle around 109.30 now, but then you see bids popping up 25, 30 points under the figure as well. So that's typical for those hedgings going on, especially on expiry day. It's a pretty large amount. There's up to 7 billion euros expiring in this figure 30 zone. So that's a pretty hefty amount.
That's where they'd like to peg it so they could collect the put and call premium, right?
Well, they mostly hedge around actively. So if let's say you have puts on, you're going to be buying below the figure and then selling it out again above 30 to try and make back your premium or make some on top of the premium that you paid. So they are actively hedging within a range. And then the second thing that came out about half an hour ago are the ECB minutes. And if not the gap between doves and hawks increasing, at least there are some relatively hawkish comments in there. And we had similar the month before, where Lagarde had to convey some sort of a less dovish message, but then she crushed it herself the next day. But we see in the minutes that more and more people are arguing for the conditions being met to normalize and the level of inflation being uncomfortably high. So perhaps we are not going to collapse too much further in the euro before the ECB next week.
In fact, don't you think it's set up with sentiment and most people looking lower? That a short squeeze is likely, especially if we hold 108 going into it.
It's possible. You know me, I'm not a euro fan. I still think
you're not.
Over time we might trade it lower because there's a lot of weight on its shoulder. But with the first round of the French elections this weekend and then the ECB next week, there might be an adjustment in positions being made, especially in the euro crosses. Like euro commods, we're already seeing them pulling higher a little bit. Euro yen is not really dumping away. It is possible. I really wouldn't rule it out. I have not much of a position in the euro right now, but I can imagine myself even being tactically long for a couple of days, perhaps.
And hey, good morning, Kman.
Good morning,
Good morning, Dale. Good morning. I just wanted to, first of all, I wanted to say I echo your sentiments. Listening to your commentary yesterday, Kman, got me thinking. One of the things that I talk about it quite a bit on these webinars, F.A.C.E webinars, definitely our morning edge and, and daily roundup, the private webinars for the ForexAnalytix folks. But you guys have heard me say this, well, at least the people listening in has heard me say this over the years and years and years. Whenever there's a big event, the market tries to go neutral because it's positioning, right? So if it's a interest rate decision like we're dealing with the ECB, the market's going to get kind of squared up a little bit ahead of a non-farm payroll if everybody's paying attention to jobs. You'll
Good
see
point.
whatever range we were in, we're going to find ourselves mid-range. So, the euro mid-range is probably somewhere around a 110 level,
Yep.
Maybe a little higher, between 108 and 111. And so, taking your comments into yesterday, taking a look at all these euro crosses. I mean, you got the euro Aussie that's quite possibly going to put in a false breakdown this week.
Why don't you grab the charts, buddy?
Yeah, sure thing. But I'm just mentioning this because really it was your commentary yesterday, Kman, getting me into that thought process. Here's the euro, the 108 to 111. I would think this is mid-range, somewhere around here in the euro. So then you have, let's just go to the euro Aussie, for example. So here we got the euro Aussie with a false breakdown, right? So, we got, broke down, hit the 127% extension, has reversed. You got the euro sterling that's holding the 618 retracement. You got the euro Kiwi that also, here's your breakdown point. And you're looking at a false breakdown. I mean,
and before you switch to other crosses, these euro Kiwi and euro Aussie, have we seen the move that those things made since February?
Yeah,
it's massive, right? So ahead of an ECB meeting, even if we don't expect much to happen there, because it's apparently not a decision-making meeting, but even if there's not a lot to happen, the market will, as you say, probably adjust a bit their positions. This move being so huge, there have been a lot of money managers and a lot of model funds dragged into these moves because they have to, right? They have to make returns. They will have been taking quite large positions in those moves. So it is very possible that ahead of ECB, if there's no big accident on the French election, we do correct a little bit in those crosses, if not reverse, but correct at least.
Yeah, and that's what I'm thinking. Now the flip side to that is, we might get a little bit of a correction, but this is how I want to play it because I'm going to go through just really quick, just kind of fast forward and think about this next steps, because this is, as a trader, I try to think a few steps ahead of the market. That's, what we all try to do. That doesn't make me right. And I need to make sure I'm very clear on that. It does, just because I think something's going to happen or I try to work through the process doesn't mean that it will happen that way. I'm not, I never, try to tell people I'm that good, but in my own head, I try to work through what could actually happen here. So I want to go through this process because if the euro, like let's say the euro, we get a little bit of recovery, we break 109.40, we make it up to 110, 110.20. Let's just say something like that. And I'm not gonna try to guess exactly where we're going to be at the time of the ECB meeting, but let's just say for argument's sake, we're above 110. So if you're long here and it gets to 110, whatever, let's say that post ECB meeting, we walk away from the ECB meeting and we're like, holy cow, the ECB is actually going to try to fight inflation. They're not so concerned about growth. They really see inflation being a genie that they have to put back in the bottle. They really care. They're going to fight it. At least it gets the market thinking that way. Doesn't necessarily mean they will have to act on it by the end of 2022. But if that, if the ECB virtual dot plot starts, getting analysts thinking, holy crap, they might actually raise rates by a full percentage point by the end of 2022 because they are serious about fighting inflation. Well, next thing you know, you're going to see the euro rally quite substantially, even without the ECB doing anything. But providing rhetoric. You could see that everybody's already priced in the Fed, raising rates 8 times, or to bringing the Fed funds rate to 2.5%, whatever the market's thinking. That's already factored into the market. How about flipping the narrative with the ECB, and now you have that divergence of central banks converging. That would really mean that the euro could quite rapidly rally towards the 200-day moving average once again, which is all the way up here around 114, 115. So, and that's without a resolution of the, Ukraine-Russia situation. So I'm just trying to think ahead, like what could happen post ECB. That's why for me, I'm establishing some longs here because I know where I'm wrong. We all know where we're wrong, don't we? I mean, if we break 108, we're probably going to see 105 parity, something like that. I mean, I know I'm wrong below here. I mean, below here, it's going, hell, who knows where the hell it's going. I mean, you look at the euro for since its inception, we break below that, 108 level where we might be going to parity. We might be going to 97 cents. Who knows? But that's my thought process here is we have such critical support at the 108 level, and we're so close to it. Why not play off of it heading into a central bank meeting that could actually make a difference? Yeah. Do you have any thoughts on my ideas here, Kman?
I think 110 is around neutral for now because it's a nice and huge big figure going into the ECB. So I think we can make it back to 110 going into ECB because the market tends to price in those dollar moves, but then tends to forget about it because my mantra, the market is suffering from generalized Alzheimer. And they tend to forget 2 days after taking a position why they took it. So I think 110 is possible. I think especially those euro commodity crosses could correct, providing that oils don't start to rally again, because we are starting to get used to trade it around, let's say 100, goes back down to 95. Euro could actually already take a little bit of comfort from that, and then if energy doesn't go bananas, as we are actually seeing right now, because if you look at the last, let's say, dollar rally, euro suffered less than Aussie and Kiwi, for instance. So it's already in the making, in the process. The only one that really would need to correct is even euro dollar now to back to 110, and the rest sticking where they are.
So Dale, you pointed out the possible 3 drive in the dollar index earlier, and I myself have been looking at the dollar index is hitting the top end of its channel, right? Yeah. Mm-hmm. And as you're pointing out here, it's like divergent. We hit the 127% extension. I was actually expecting a move to hit the top of the channel. It's interesting. I was
still
talking
could.
Well, I'm sorry.
It still could.
Yeah, I think it still could, but what's going to stop it in its tracks is if we start trading new lows, which will be when I say new lows is not like new lows.
It'll look like a false breakout over the triple top.
Correct, and in any uptrending market, people get stuck trying to trade on the long side because they're buying breakouts. It's not that the trend is over. It is, and this is trading, right? You buy the breakout because, we're in an uptrend. So you buy the breakout, and then next thing you know, you're caught on the long side. The market breaks lower. Then by the time it gets down here, you get stopped out and you're like, holy crap, now I'm going to go short. And then you go short. And then next thing you know, we hit the channel support, and then we reverse, and then we catch all the people that said, oh crap, the dollar's going to turn, that catches them short. Then we go back to resuming our uptrend that has been in existence since, mid 2021. So,
the chasers.
It does. That's why so many people fail in the market, because they try to trend trade and they trend trade at the wrong times, right? So, I mean, that's why I don't chase things higher. I'm not a big breakout trader. I tend to buy dips if I'm trading an uptrend, or I sell rallies if I'm trading a downtrend. So when you take that step back in the trend, when you take the step back, you want to be, long going into, back into the trend. Those are the types of trades I tend to do. And the dollar index is been pretty good about catching people on the wrong side. And if you think about it, is the euros at that 108 level, the dollar index is at 100. And, there's a lot of people that are very bullish the dollar right now.
Yeah,
So,
there are still. Yeah.
So
That behavior you're talking about, it's the same in the stock market. Everyone gets real bearish, VIX 30. And, if you've been buying at VIX 30 and then selling at VIX 20, you're doing pretty well. But most people, they're selling at 30 and, buying at VIX 20.
Yeah. VIX gets above 30, 32, 34, and they're like, oh my God, here we go. We're going to have a complete meltdown in the markets. They get long VIX, short stocks, and they get their ass handed to them. I mean, it's just, you got
3 times in the 6. So 6 times in the last 4 months or so.
Yeah. And speaking of VIX, I was talking about volatility yesterday with Chris Weston, and the elevated volatility is, in my opinion, a risk for risk assets. I think we are perched at higher levels, which is a warning for higher volatility, but it's a warning for people that are long too. Kman, I'm sorry, you were just going to say something.
No.
I was.
Oh,
Yeah.
Don't care about
there he
Stelios.
is.
Don't care about me. Okay.
Move along. Who else? Hey, good morning, Stelios. How's it going?
Hello. I just wanted to say my view on the euro. I have talked about it.
Not again.
Yeah.
Shut him off.
Good morning.
I've talked about it for the past.
Hold the mic. Okay.
Okay.
Passionate. He's passionate.
Okay. I won't talk. Bye.
Let's hear it.
You guys know me, right? When was the last time I had a proper, conviction on FX? It's been rare lately because of the low volatility. If you guys remember, the last 2 trades I was banging on about all the time was short Euro Norway and dollar Norway, and short Euro Pound from the 90s. And, those did well. I must admit, maybe I got lucky with them as well. But I have this feeling that the ECB has to, at some point, is it going to be next week? Is it going to be the month after? I don't know. But they have to start acknowledging inflation that is not transitory. They have to start fighting it. And I think they will. So the question is, where do you get in? What do you do? I think Euro Dollar and Euro Pound, they are my favorites. Basically, because I think the dollar has a lot now priced in, and we saw yesterday's meeting minutes. They told us that they're going to continue at a good pace. 50s are expected now, and it's so. Whenever I see the market going one way in one currency and nothing in the other, I just my spider senses start tingling, and I think that the ECB will fold at some point, let me use that word, and they are going to acknowledge inflation, and they are going to do something about it, or at least they're going to tell us they're going to do something about it.
That's not your spider senses. That you just have to go to the bathroom. Just go
pee.
Maybe if you need to pee, just go pee.
But I've been talking about waiting for a false breakdown in Euro Dollar and Euro Pound. I think I'm going to get in a little bit, just start accumulating positions slowly ahead of the ECB next week, because I think there's a danger. But I tell you what, the minute they turn around and acknowledge inflation and turn hawkish, the euro is going to be up 1% in a day or 1.5%. I don't care. I'm going to get long straight away.
Welcome to the party.
Yeah.
Welcome to the party. Go ahead.
No, I was just going to say, the way I trade, I don't trade intraday. I don't mind losing the first 1% or 2% because I'm not in, short term for such trades.
Right. Well, Stelios, thank you for your.
Watch out not to break your 4% daily stop loss rule, Stelios.
Oh yeah, absolutely.
And your 5% max, otherwise you're in the penalty corner for a week.
Well, good morning, Steve. Heard your voice.
Good morning.
How's it going over there?
So and so.
Yeah. Well, You know, Steve, if you guys do not know this, Steve is behind the scenes working diligently on the Traders Summit conference. Remember, this starts tomorrow, guys. It's free to register. So tomorrow morning at 11:45 a.m. Eastern. So that's approximately 20 or 30 or 28 hours from right now, somewhere around there. I think that's it. We get somewhere around that. We get the kickoff for the Trader Summit event. If you guys have not registered, it's going to be massive. I mean, you know, I was looking at there's like I saw another event and that's happening, and they had like 60 speakers now, and I recognize maybe like 10 of them, and then I've been doing this for 25 years. I've been in the markets. I'm pretty up to speed on social media and stuff like that. I watch Bloomberg and CNBC, and I know who's around, and I know who all the names are. There's like 60 speakers. I recognize maybe like 10 of them, and the rest was just, I have no idea who the hell they are. And the thing is why would I want to go to an event where I'm just like, it's just convoluted with a bunch of stuff? Like, this is like some of the best that you're going to see lined up for you, all ready for you, all ready to take your answer or take your questions. And it's going to be massive. So make sure you guys
and Blake, if I may interject here, we're not a channel, right? We're not trying to sell people hype or anything. We're bringing people that are actually in the markets, people that are actual economists with real life experience, people that understand how the markets and the economies function, because the end point of the event is for people to leave after watching whoever they want to watch, being wiser than they came in, right?
Yeah,
I hear you guys are raffling off. I hear you guys are raffling off some backstage passes.
No, for autographs.
No, but there are a couple iPhone 13s, and I'll tell you what, I love my iPhone 13. It's pretty badass. I had to upgrade this year, and I love it. So yeah, make sure you guys register. It's going to be a fun event, and like I said, Steve been working around the clock on it. So it's good to hear your voice, Steve. What are your thoughts on the euro? I'm sorry, I didn't want to take away from your euro analysis. I just wanted to make sure everybody knew that, hey, it starts tomorrow. So register, okay, if you haven't done so already. And by the way, just in case you guys missed it, Peter Schiff, he tweeted about the event yesterday, saying that so you guys know, Steve, do you want to tell everybody?
Yeah, we made an effort. We made an effort. We had some connections, and we made an effort. Unfortunately, to be frank, I was pessimistic since the beginning that she would accept. But we made an effort to get Cathie Wood to debate Peter Schiff, since, as you understand, they have opposing views of how things are looking at the moment, right? But it took her some time to get back to us with her decision, but she declined. So that would have been an amazing debate. So Peter Schiff tweeted out that, come join me in that event. These are the guys that actually tried to get me a debate with Cathie Wood, and he tagged her on Twitter. But she was, what did he say exactly? She was smart.
She chickened out.
If I was her, I wouldn't want to debate me either.
We should get Ben Bernanke to debate Schiff next time.
Oh my God, it would have been epic. And so, hats off to Steve and who was working, and not only it was Steve and a couple other people working behind the scenes trying to get that.
Yeah, Justine actually made the connections to get her.
It would have been epic. But anyway, I just wanted to tell you guys that story because I thought it was hilarious. When I read his tweet yesterday, I about fell out of my chair.
Speaking of which, Blake, he didn't just tweet about it. He even mentioned it on the middle of his podcast.
Yeah. So, and
Yeah.
look, you guys are going to have your opinions about Peter Schiff. Oh shoot, I don't have my picture here. Maybe I do. I'll tell you this much. The guy he has polarizing views. You either love him or hate him, and there's a lot of people that love him. And regardless if you agree with him or disagree with him, he's got his views and he sticks to his views, and he is, like I said, he's rather polarizing depending on who you are.
I tell you what, he's been consistent. And if you go back 10, 15, 20 years, what he's been saying, and you follow what he's been saying, you would have done pretty well. So,
Peter,
I like him.
Peter, in my opinion, is one of the people that understand the economies and economics better than the vast majority of economists out there. He's an economist, by the way. He's not like somebody that came from nowhere or no background or whatever. The only problem is that because he's a lot focused on fundamentals, as always, it's timing. So he's practically always right in what he thinks is going to happen. He's always early, on the other hand, but the outcome is always spot on, just early.
Yeah. Well, that's that's the problem with a lot of people, right? They end up being right, but way early. Anyway, okay, Steve. Hey, what's your opinion about the euro here before we wrap things up? So I know you popped in because you wanted to say something. So what are your thoughts on the euro?
My thoughts on the euro remain what they were. I thought that the euro is going to break down and produce a new low, and I still think there's a good chance that we're going to see a lower low. But after that, I'm with you guys. So my divergence is only in the very short-term view. I think that soon enough we're going to get the ECB to finally do something, and that's probably going to mark some kind of a significant low, and it's going to be a long opportunity because the market, as always, as it happens in turns, is going to be one-sided. Both sentiment and positioning, right? And these are the best markets to violently swing the other way. But I think we need a little bit more time, likely, for that to happen.
Yeah. All right. Well, good to hear your views, Steve. Kman, I know Ryan is out right now. Kman, Did you have any final thoughts before we head into North American trade? It's been, and by the way, just. Today was one of those days when I got up and I looked around and I'm like, man, not a whole lot happened overnight. So, but usually when it's quiet in Europe, that means the North American session could be a little explosive. So, any thoughts, Kman?
On other things, keep an eye on dollar yen as usual. 124 figure 5. We're still struggling with it. I still think there's a few natural offers around there, but will we have like a 123 type of move? That means that have 3-4 attempts to clear the offers and then do another big figure. It's possible. In the meantime, I'd say respect the level, respect this 124 figure 10. I wouldn't be start to buy right here, just below. Just wait for it to show the offers or the cap or the break if you want to do anything.
This red zone, just so you guys can see, has been in existence for 20 years. So we're there, right? So we're right into what we call the resistance zone. So just be really careful with longs. What Kman's saying is it's a big figure. A lot of rhetoric around these levels. You're starting to hear it, percolate from the Bank of Japan and Ministry of Finance. You're going to get more on any move above 125. So thank you, Kman. Stelios, any last minute thoughts?
Not really. No.
Oh.
Sorry.
You're no fun. Okay. And with that being said, we're going to be handing it over to Dale. Dale, who do you got today?
Chris Capri at Second Skies Forex. And
got it. Okay. Well, as you come on with Chris, I need to mention to you guys at home, if you haven't tried out the Trader Funding Program, make sure you give it a whirl. For those of you that want to access, larger trading accounts with, and maybe you want to trade our money, you don't want to trade your own money, you don't want to risk your own money. Well, you have to take an assessment. There is an assessment fee. We just had, a couple of traders reach live trading accounts this week, which is great. And they're trading our money now. So if you want more information on that, on how to do it, There's a 2-minute video there at the very bottom. So make sure you check out the trader funding program. I'll put the link in the description so you guys can check that out. And Dale, thank you for being here this morning. Thank you for always hosting us with the utmost professionalism. Steve, Stelios, Kman, thanks guys for being here and providing.
Thanks for the coffee, Dale.
Every day. I'm sorry.
Thanks for the coffee, Dale.
You're welcome, buddy. And great job, team. Chris, are you here? Will you give me a sign that you're here? I see a couple Chris's here, but I don't see Chris Capri. So,
if he's not here, he's not here.
Yeah. So I tried to get a hold of him on Twitter. Let me check one more time.
We've had.
I'm having a tough week, huh?
Yeah, we've had actually, and it's rare, guys. Just so you know, when we have guests, it's usually they're spot on. They're here. A lot of people love to have an audience to be able to tell their ideas and their analysis. But it's strange. We had like 2 this week.
Yeah. Well, out of our hands, and I'll reschedule Chris maybe for tomorrow because I don't see him in here. And Christopher Farron isn't a different name. With Chris Capri, have you been Christopher Farron all this time, or Chris Scott? Okay, so join the guys in 45 minutes for the morning edge, and get those backstage passes. And get motivated at this conference to sign up to get your own live account, trader funding program, and be disciplined. And I'm really amazed, Blake, that, I know there are a lot of people that have to do it more than once, but in such a short period of time, you have to have any live traders right now is an accomplishment. That means we attract smart people.
It's the volatility that's, it's tricky because people are this is the problem with most traders is they don't manage risk, right? So they're not really good risk managers. They can identify potential ideas, but they don't manage risk so well. The trader funding program really fosters that because you're going to be managing
and not only that,
so you have to manage your risk, right?
Yeah, and not only that, I know our research is great, but in my opinion, I think what you guys accomplish in your chat rooms in the community, all through the market sessions, is really one of the finest assets for traders out there to get involved in the chat room. There's so many great traders.
That's when we don't, so you're not being left alone, without ideas. And that's one of the other big benefits of using the trader funding program is you get our community is included for a period of time through your assessment process. So this way you have people to talk about. You got the trader funding program discussion board where people talk openly about everything that they're doing. So it's pretty cool. But yeah. Anyway, I was going to say that we have to be careful with volatility. Volatility is increasing and it's staying elevated. So that means that you have to adhere to good risk principles at all times. Keep your stops close. Keep your stops wider with smaller positions. So this way you're always managing your risk and not getting in a lot of trouble. And that's going to be important, not only if you're doing an assessment, but in your real trading accounts, to stay safe. So everybody, hey, have a great day. We'll look forward to tomorrow. It's Friday. B, it's the kickoff of the Traders Summit. And then C, it's Friday. Did I say it's Friday?
Yeah, TGIF tomorrow, buddy.
All right.
All right, everyone.
Thanks for being here today.
All right, everyone. Don't just count your pips, count your blessings. Good luck. See you later, Gorkum, Mike, Richard, all you trading warrior brothers and sisters. Thanks for being part of our community. And it's been about 5 years of doing this now. Okay. Adios.